What's going on, guys? It's Lewis here with Crypto Elite, and today I'm going to do a very quick run through, just a rundown on the shorter time frames. This is going to be a new series that I'm going to start where I am going to try to actually look at the charts every single day. It doesn't mean that I'm going to be trading every single day, but what it does mean is that I'll have levels of interest that I will be marking out on the shorter time frames. And then if the price comes into those levels at the same time as I, go online to create these videos, then I will look for trade setups. So yesterday I looked at, I did a market update video, and now I want to do a shorter term series for short-term trades. And I just want to make it clear that when it comes to shorter term trades, you're going to be wrong a lot of the time. So number one, you're going to be wrong a lot of the time. So you got to make sure that the RR is good, and which is the risk reward, so that if you lose, let's say 40, 50, let's say 50% of the time, if you lose 50% of the time, but when you win 50% of the times that you win twice as much as what you lose, then that means that you will actually come out ahead. And to demonstrate that, we're going to take a look at these two scenarios right here. So we have this trade at the bottom. So this trade at the bottom, you could see it says risk reward ratio equals 1. So that means, and the reason why the risk reward ratio is 1 is because if we win this trade, if this trade goes up, if the price goes up and we hit our take profit here, that is 2% away from our entry. However, if the price were to come down and hit our stop, that is 2% away from our entry. So 2% up or 2% down, 2% to take profit, 2% to stop loss. That means that the risk is 1 and the reward is 1. So it's even. And so if we risk $1 on this trade, then we will lose that $1 if we get stopped out, and we will win $1 if we actually hit our take profit. And so what does that mean? Well, let's say that we put 100 trades on, and our risk to reward ratio for every single trade was 1-to-1, or it was just a R of 1, which is another way of saying that. Well, if we, put on 100 trades, so I'll do this, 100 trades, and we had a 50-50 split, so we won half of them we won. That means that if we risked $1 on every single trade, we would end up losing $50 and we would end up winning $50 if we took 100 trades, because we lost $50 on the ones that we lost and we won $50 on the ones that we won, right? And that's a 1-to-1 risk reward, right? Now let's take a look at this trade setup right here. So this trade setup, if we win, this is a short trade setup. So if we win and the price comes down and hits our take profit, it's 2% away from our entry, and our stop loss is 1% away. So our take profit is actually twice as much away from our entry as our stop loss is, which means that the risk to reward ratio is 2-to-1. If this was 3% and this was 1%, then our risk to reward ratio would be 3-to-1. And if this was 4 and this was 1, then it would be 4-to-1, et cetera, right? So this right here is 2-to-1, a 2-to-1 R ratio. So in this case, let's say, we put on 100 trades, we won 50%, and we lost 50%, so 1/2 won. That means that on the ones that we won, if we're betting $1 on every single trade, but we're actually winning $2, if $1 is what we risked, and we bet and we would win $2, that means that we would win $2 on every single trade. So if we took 100 trades, we won half of them, so we won 50. That means that we won 50 times $2, which would be $100. So it's plus $100. And if we lost half of them, that means that we lost $1 every single time that we lost a trade times 50, which means that we lost 50, which means that we would be, in the end, after 100 trades, plus 50%, excuse me, plus $50 if the RR is 2 on every single trade that we took, and we took 100 trades, right? So that is why it's super important to have R ratios at least over 1, but preferably over 1.5, because you're going to lose a lot of trades, especially on the lower time frames. So getting it in like getting a 2-to-1 risk to reward ratio is super, super important, or even a 1.5 risk to reward ratio, something above just a simple 1. That's important on these lower time frames, because I'm probably going to lose a lot of trades during this series because it is on the lower time frame. It's not like my typical swing trading account, and so that's like super important to know. Don't go all in on any of these trades that you see just because you see them, because expect a lot of them to actually lose. So that's the first thing that I want to go over. Okay, and then the second thing that I want to go over is actually how I'm going to be trading during this series, which is pretty much how I typically trade, except I'm going to be trading on the lower time frames. So in a downtrend, the first thing I do is I look at the trend. So I see this is a downtrend right here, right? And then what I would do is I would take the Fibonacci from the top to the bottom, and I would look for what's known as the value area, which is anywhere that would, in this case, be above the 50% fib retracement, right? And I obviously love the golden ratio, 61.8. If you know me, that's my favorite thing. So I would look for somewhere in here in order to get short. Typically, I could actually look to get short anywhere in this box, and so this box is what's known as a bearish breaker, a bearish order block. That's what this box would be. This box would be a bearish order block. So I'll just put that like this, and I'm going to label that like this, bearish OB, right? And so I wait for the price to come somewhere in here, probably right around here, and then if this is on the higher time frames, let's say this is on the daily time frame, then I go down into the 12-hour, the 4-hour, the 1-hour, and I will look for trade setups. And I'll get into those in a second. The other way that I look for things in the very beginning is if we're in a bullish uptrend, if the market is moving up and we're in an uptrend, then what I do is if the price makes a swing low and a swing high and it starts making its way down, I'll take the fib and I'll look to get into the value zone somewhere underneath the 50%, and preferably at 61.8, but it really could be anywhere down here, because this area right here, this is the bullish order block. So I'm going to be labeling the bullish order blocks like that. And so what a bearish order block is the up move before the down move that ended up breaking the market structure. And the market structure is basically you see where the swing low is, and then you see where the swing high is. And then if it ends up closing lower than the previous swing low, well, that is a breakdown in the market structure. It's a bearish break in the market structure, or a market structure, or a bearish market structure break, right? So you could actually label that, and I like to label them as MSBs, okay? So that's a bearish market structure break. And then I wait for the price to retrace before continuing the trend, because 75% of the time, the trend likes to continue. So I'm going to always be going in the same way as the trend. That's the way I'm going to be trading this. And as for bullish trends go, if there's a bullish market trend, this is right here a market structure break to the upside, or a bullish market structure break. As soon as it closed above this previous swing high, this is now a bullish market structure break, right? So now we're in a bullish uptrend. I want to wait for the retrace into this bullish order block, and then somewhere within here, I'm going to look on the lower time frames for trade setups to get into. And that's what I hope to do in these daily trading series. So the trading setups, basically what's going to happen is you could see that if this is on the daily time frame and things are going down, then on the lower time frames, say the hour or the 4-hour, things start to go up, right? And maybe it looks something like that. And then on the hourly or the 4-hour time frame, eventually the price will start turning around, right? And then the price will start going back down again. And on the daily time frame, maybe it's just going to look you know, maybe it's going to look like literally like this, and it's just going to look like these are going straight down, and there's no moves up, and this is looking like it's going straight up, and there's no moves down. But on the lower time frames, you're going to see that shift in the market structure before, on the 1 hour, on the 4 hour, before you see it on the daily, right? And so the shift on the market structure is the same exact thing that I'm looking for on the higher time frame, which is the market structure break. So if you look at this, or I guess if you just take this and we go like bring it out here, we could see that this is a low, this is a higher low, this is a higher low, this is a higher low, and then boom, all of a sudden we made a lower low, our first lower low. And so when that happened, that means that this right here is a bearish market structure break. And then just how I look, you know, for the retrace on the higher time frames, I'm going to look for a retrace to be able to get into a short position, and I'll, you know, get into a short, and I'll do something like this, and then I'll target, you know, target the lows. And that's what I plan on doing in this series. And so that's the bearish way of doing things, and then the bullish way of doing things is literally the inverse. So this is the daily time frame. Let's say this is the daily time frame and it's going down. Well, on the lower time frames, you know, the 4 hour, the 1 hour, the 30 minutes, whatever, it's looking like this, right? And then I guess it looks something like that. And then eventually it hits a point where it stops making lower highs and lower lows. It stops doing that, and it all of a sudden it makes a higher high, right? So as soon as it does that, as soon as it goes above the previous swing high, just how back here this right here went above and closed above this previous swing high, well, on the lower time frames, it's going to do the same thing. And as soon as it does that, well, that's going to be a market structure break or a market structure shift, whatever you want to call it. And then I'm going to be looking for a retrace to buy, and I'm going to target a high. So I'm going to be targeting, you know, somewhere up here for this trade. And that's how I'm going to do it that's how I'm going to trade this. And then what I'll do is I will, you know, before but before I put the trade on, I'll also look at the RSI, the stochastic RSI, and the MACD. And if there are bullish divergences, then that'll make me bet even more. So if I see bullish divergences on these different indicators, then I'll bet 5% of my account. If I don't see any bullish indicators on these, or bullish divergences on the indicators, then maybe I'll only bet 1% on my account. It really depends on what I see in terms of what the candles are doing, and how confident I am in the trade and everything else that's going on, right? So I'll bet anywhere between 1% of my account to 5% of my account. And what I'll do is I'll probably actually start a account. I'll put $1,000 in there, and that'll be part of the series, and I'll just track it, and we'll just see what happens with that account, and I'll only take trades on that account from these videos. That might be a thing. If you want that, that seems cool to you, let me know in the comments. Just type in that you want to, you know, see me tracking my trades for these videos. And also what I'll do, because these are going to be daily, they're going to be very short. This is obviously a long introduction, but they're typically going to be pretty short. So I'll be able to sort of just like breeze through a lot of different charts. And so that's what I plan on doing. And then for anyone that's in my Discord group, I'm going to be putting in alerts like how I always do. And so you'll get the actual alerts. And I will also obviously, you know, type in what I'm doing in there as well. So that's that. And so now let's actually get into the charts. Okay, so let's start off on Bitcoin and do the analysis here. And so what do I see? I see that we were in an uptrend. We were in a nice uptrend on the weekly time frame, but we ended up breaking the market structure down on the weekly time frame. So now we are in a downward, we're in a downtrend now on the weekly time frame. So what I'm looking for is a move up to preferably get into short position, and my target is going to be the, you know, somewhere underneath the 50% for here. So my target is probably going to be right around here. So this move is the weekly bullish breaker because it's the down move before the up move that ended up, you know, breaking the market structure right here, right? So what I'm looking at, what I could see is that on the weekly time frame, we have all of this. And so I would really want to look for trades, particularly down in here. Now, of course, what's happening right now is actually like really bullish with the fact that we had this nice, we're forming this nice weekly candle, but there's still 4 more days. So there's plenty of days for this candle to really do whatever it wants to do. So I'm looking, my bias is short because on the weekly, we did get that weekly market structure break to the downside. And not only that, but look at this. Look at the weekly time frame. So this was the weekly close, right? We closed back above it, which you would think would be like nice and bullish, but no, we ended up falling back below it. So I am short-term bearish. But remember, this is going to be a very this is all short-term stuff. This is all short-term stuff. So I want to write this weekly MSB for this level. So now I go down to the daily time chart, and what do I see on the daily time chart? Well, I see that we had this range from the top to the bottom, and we came into the golden ratio, and then we ended up, you know, selling off and making a lower low, and that was the weekly market structure break. And then we had this range from this top to this bottom down here, came to the 61.8, and now we ended up selling off. 1, 2, 3, 4, 5. One thing that I will say is that this actually might be the bottom, and the reason why this might be the bottom is because I do see a potential 5 wave right here, and that's typically, you know, the 5 wave structure is what you typically have when there is a top or a bottom. So this could be a bottom because not only is this actually a 5-way structure, but if we go to the 2-day, I guess you don't see it on the 2-day for some reason. Maybe a 3-day will show it. Open right there, close right there. Hold on a second. I'm trying to find something. Well, on the daily time frame, you could see that this opened here and closed here. So this should be a huge hammer candle, technically speaking. Okay, so I can't get it because the days are not lined up correctly. But yeah, this right here, a little trick that I use is I look at the open of one candle. So I look at an open, and that's the open of this candle, right? Because it opened here and it closed down there. And then I look at the close of another candle, and so the candle right next to it is this one. So it ended up closing right there. So if we take the open like this, if we take an open, okay, and then we say it opened there and then it closed right there. Okay, and then everything that happened after the open and before the close is a wick, then technically speaking, this is what this candle would look like if they were put together, if it was put together. And this is obviously a super, super bullish candle. I mean, technically speaking, it would have a tiny, tiny wick above it like this. But this is exactly what these two candles look like, right? So that's really bullish, not to mention the fact that we had what's known as a swing failure pattern right here. So we have this SFP and we have that. So now I'm in a spot where on the weekly time frame, we are in a downtrend, right? And on a daily time frame, let's see, we had the highs, the lows, the highs, the lower lows. And then I guess you could say that this right here, actually, this was a low, a high, a low, and then a a low, which was not as low, and then we made a higher high. So this right here was actually a market structure break to the upside, but ended up being a swing failure pattern as well. So I'll bring this down just a little bit, and this was swing failure pattern of this side. So the range is really, something like that. It's really something like this, and we had a move above it, and then we ended up having this move below it, and then now we're all the way back at the top again. So that's pretty bullish. That's pretty bullish to me, which would make me think that I want to look for longs. And so let's go down into a lower time frame and see if there is something that I'm seeing here. So 1 second. Yeah, so what I see here is actually the high, the low, the lower high, equal low, breaking the market structure up. So now I'm bullish, and then a quick reclaim. So I would look for longs here. Initially, I would look for longs here, target up here, but that didn't happen. This actually broke straight through. So this broke straight through and created a lower low, which means that there was a market structure shift to the downside, which means that it's the trend is bearish. And let me actually do this too. And so this right here is the bearish order block, and it looks like we actually came into it and are making our way down. So yeah, I'm bearish. So I would look for, on the lower time frame, a bearish market structure shift to the downside, and that's what I would play. So I'd look for that within this box somewhere. So on the 1 hour, we have the low, we have the high, we have the higher low, and then we have the higher high. This though, right here. So on the hour chart, on the hourly chart, this right here was the bearish order block. This was because technically speaking, this was the up move before the down move that broke the market structure on the 1 hour charts. So this was the bearish order block, and now that we busted right through it, this became a bullish breaker. So where's my little thing? This could do something like this. However, this is the bearish order block on the 12 hour chart. So 12 hours is more significant than the hourly chart. So I would expect something like this. So we have 45 minutes left of this hour before this hour, but if this hour closes underneath here, that's going to be the market structure break. We have the low, we have the high, we have the low, we have the high, and now we have the market structure break underneath this low right here, this higher low. We have the market structure break underneath there. So I would expect a move up, followed by a move down into potentially, back to this area back here. Okay, so with saying that, I have a trade set up. So what I did was I took the fib from the bottom to the top, and I looked at the 61.8, and if you scroll left, you notice that that's actually right around here, the hourly support levels. And so if I want to put on a short position, I would wait until the price comes up into this up move before the down move that broke the market structure, and because this is going to be the bearish order block on the 1 hour time frame. Let me just double check here. This low is 26,902, and this is 26,876. So if this closes down here, if this ends up closing lower, then this is going to be the 1 hour bearish order block, which falls in line with the 12 hour bearish order block. So I would want to just short somewhere of here. I would put a stop, probably put a stop above this wick, and just in case we get some nasty wick right above here, and I would target down here, which is a 2.65 R trade with a 1.33 and a 3.52 trade setup. Now things are looking super bullish, like I said. So I have no idea if this is going to work out, but this is what I would do looking at it on Bitcoin. And so let's go to Ethereum. Okay, so now we're on to Ethereum, and if we look at Ethereum is, created a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then some consolidation around here, higher high, and then honestly, this is a higher low, this is a higher low, this is a higher high. So on the weekly time frame, it looks like Ethereum is actually is bullish. Let me go back to Bitcoin real quick and just take this off. We have the high, the low, the higher high, higher low. Yeah, see, the Bitcoin is bearish because we have the high, the low, lower high, lower low, lower high. So yeah, that's bearish. But Ethereum has the high, the low, the high, the low, the high. I guess you could call this the low. If you call this the low, and then we have the high and then the low, that's the lower low, that's bearish. But now we made a higher high. A higher high compared to here. So, but not compared to here. But compared to the close we did. Ethereum looks better, actually. Yeah, Ethereum just looks better, depending on how you want to look at it. So let me get this back up here. This right here was the previous high, and lots of liquidity was up here. So this is scary, but high, low, if you want to say that this is the high and then the low. But now that we did this, that we've closed above the previous high close. So it's not bearish. I'm going to say Ethereum is definitely not in a downtrend on the weekly time frame. And it's potentially in an uptrend. It's sort of in purgatory right now. So it looks fairly good. So I would probably have a bias towards Ethereum over Bitcoin. Looking at ETH BTC, I mean, I don't know. I'll look at this later. But yeah, let's go to the daily time frame on Ethereum. So on the daily time frame, what do we have? We have this huge area of liquidity that just kept on getting soaked up. So buyers kept on buying down in this area. Every single time it fell below 1780, that was a buy. Actually, between 1790, anytime that it fell below 1790, $1,790, people were buying it up. So that means that I think there's a lot down here. There's a lot of buyers within this entire area. I mean, there were, and so if it comes back down here, we'll see what happens again. But right now, let's go down to the 12-hour 1 second. Let me just take a look at this. Okay, so we had the. I'll go back here. I'll start here. So we're basically uptrending, right? Uptrending, downtrending, and then we broke market structure down before moving back up, which made this right here a breaker. So you would buy any of these wicks and then move back up, and now we're in a definite uptrend, and then finally, boom, we closed underneath here. And so that's really not good. And then once we closed underneath this line, that really wasn't good. And then we had a slight move up before breaking the market structure again. So this move right here, this became the bearish order block. And we ended up, tagging it here, coming back down and coming back down to pretty much the lows. And then we had what was another just the really sick fake out. So move up followed by this move down. That was really, really bad. So this was a swing failure pattern. And then you basically market, sell, and target the lows, so that would have worked out really well. And then finally we had the lows, highs, lows, highs, lows, highs. So consolidation followed by this break of the market structure up. So now it's bullish. So you want to get in somewhere down here, somewhere right around here. And, but as soon as that happened, as soon as this ended up closing, now it flipped bearish again. But when we ended up coming back up here, and then it flipped, then it pretty much flipped bullish again. So I would, so then you target the highs, but it never actually got back up to the highs. It still hasn't gone up to the highs yet. And now we consolidated, broke bearish, stayed bearish, pretty much stayed bearish, and then broke down even further, even more bearish. So this right here, there's a lot of different ways that you could be looking at it, but this right here is the bearish order block on this move, because we moved up, had the bullish market structure break, bearish market structure break, down, which means that this was the original bearish order block. And well, actually, yeah, I mean, this would be the bearish order block, because we had the move up. This is the move down before the move up. That broke the market structure. Then we ended up coming back up again. So we came up before coming back down and having this, market structure break right there, if you're counting it from the body, or market structure break right here if you're counting it from the wick. Either way, we closed below. And so that made this right here a bearish order block. Then we came back into it, and we tagged the bottom. We went all the way back down to the lows again before coming back up. And so now we're back up, and we're back up into the original bearish order block. And you could actually say that this is also another bearish order block, because we had this move up before the move down that broke this market structure right here, or this market structure if you want to count this as the low. Either way, this was the market structure break. So, I'll put that MSB right there. And now this is the bearish order block. So lots of different ways you could be looking at this. You could be looking at it as exactly what I just described. This is the bearish order block. So let's go down into the 1 hour time frame. Look for bearishness. Okay, we have a bearish candle with a bearish. Nope, never mind. I thought that was a SFP, but it's not. So we need a break in the market structure shift down, which low, high, higher low. I don't really see a break in the market structure yet. Like this would have to break down in order to actually constitute a trade. This would have to break down, and this is on the 30-minute chart. Even on the 15-minute chart, on the 15-minute chart is even worse. So yeah, I don't see a short trade. We have a high, a low, a higher high, a higher low, a lower high, but we have yet to see a lower low. So what we need, like I explained in the beginning, we need this to come down and break the market structure from here. We need that to break so that we could get in on a retrace and then target somewhere down there. That's what we need, but we don't have that. So there's simply no trade set up here based off of this. Additionally, if you're looking at the 1 hour chart, this right here, this is the move up before the move down that broke down the market structure. So this is actually a bullish breaker. So there's probably going to be, some movement in here before a move up. And then it's like, okay, are you really going to fade this huge move? Because on the 12 hour, what is this? What is a huge move down followed by a doji candle followed by a huge move up? Think about it. Think about what this is. And this is at the support too. This right here, this is a morning doji star. So this is a morning doji star, which, like I just mentioned, earlier, this is the open. This is the open. Then this is the close. So this is the close. All of this down here is a wick. So on the higher time frames, this is what this looks like. It looks like this. So it's like, do you really want to fade something that looks like this on a higher time frame? I mean, I probably wouldn't. Especially into support. So I'm not looking to I don't know. I wouldn't want to short Ethereum on a low, like based off of this, even though I'm looking at the 1 hour. But if I did, here's the new range. I would target somewhere in there. And if we fell down here, closed down here, and then moved back up, this would be the trade. This is a fucking terrible trade. Holy shit. This just isn't, I'm not really getting a good trade setup on here. So it's looking like maybe it'll close. It's looking like it's going to close. It's going to create a market structure shift to downside, but this would have to really, I don't know. You'd have to do something. I would probably do this, actually. I would probably just bring my entry up a little bit. So I think we would, and then I would have this be my trade, or maybe I would just have this be my trade, because if I'm doing the 1 hour trade. So yeah, this would be my trade on the 1 hour chart. I would hope for some type of move up here off of this bullish breaker, followed by a move down, and I would probably just take my profits at the 50, because I would be a little, I don't know, concerned I would just want to take my profits, because that's a 2 hour trade. That's not bad. Okay, so I'm going to take a look at a few other ones. I'm going to take a look at BNB, because BNB is obviously a Binance coin, and Binance is in a lot of trouble, all this other stuff, right? So I'll look at the weekly time frame. On the weekly time frame, we have this area that was pretty much the weekly high, and it couldn't really just get past this level. Right here, got past it and then fell back below it. But obviously, BNB is now in a bearish spot. So what I would do is I would call this out as the weekly bearish order block. So that's what the weekly bearish order block is, and this right here is the market structure shift on the weekly time frame to be a bear. And this is obviously the top, this is the bottom, so I'd want to take profits down there. Then I'd go into the 12 hour, and I would say if for some reason BNB comes back up here, this would be a pretty easy short in my opinion, and I would target down there. So that's what I would do. This would be my trade for BNB. I would also look at the time frame, this time frame right here, bottom to the top, and actually that's pretty crazy. Yeah, maybe the weekly time frame is a little bit better. 1, 2, 3, 4, 5. Okay, so yeah, this is what I was talking about. 1, 2, 3, 4, 5. So this is 5 moves up, and then, you know, it comes back down. Oh my God. Yeah, this is actually a excellent trade, because 61.8 to 30. This is a trade that I'm going to be taking 100%. I gotta do it. Yeah, I gotta take this trade. So yeah, and honestly, I would probably TP my first one here, and then second TP probably down here, and that would be it. Unless, oof, that's a tough one. I'd probably start to stack in right here, and then I would stack my orders. So stack orders up to, you know, up to here. And yeah, so that is BNB. Pretty much, I don't want to short it down here because obviously, like, it's buy support, and it's already fallen quite substantially, and we are, you know, it's in the oversold territory on the RSI and the MACD and the stochastic RSI, all that stuff. So I don't want to sell it right here, even though it could just roll over and keep on falling. But if there happens to be a move back up, this would be really great, because this would be a move up into the 38.2 of this move down. And not only that, but it would also be probably into the 61.8 of, yeah, of here, of this swing high to this swing low, 61. Yeah, so 298, man, that's where I'm going to start shorting it, and I'll short it all the way up to 306, and then hopefully make some good money on this if it even comes up. I don't know if it'll even do that, but yeah, that's BNB. Last one that I want to do is reindeer, or RNDR, because I've been hearing so much about it, and it's actually looking so good. So we had this huge area of consolidation all the way from May 2022 all the way to January 2023. So January, February, March, April, May. That's like quite a long time. That's not a year, but it's almost a year. It's 263 days, so 264 days, quite a long time. And then we busted out of it, and then we came back and we tagged the top before moving up. And so I definitely want to be paying attention to more coins, because this would have been just such a sweet play to be able to get in right there, because this was the high, and this was the previous, you know, range low, range high, range low, range high. Busted out of it, and then came back, tagged it, and then what do you do is, like, you know, you shoot for up here. So would have been a really solid gain of 133%, so 125%. So now I want to get into it, because it's clearly in a nice uptrend. This is one that, despite many coins looking absolutely terrible, RNDR is looking good. And the big thing is that it's above its previous support areas. This was a huge support area. Let's go to the weekly time frame. And you can see it, like, back in January 22, February 22, March 2022, this was where it bounced off of multiple times, and it finally, and then also up here, this is where it got rejected from. So it finally actually came up and busted back above it, which is really nice. So if it comes back down to this 61.8 right over here, I definitely want to be getting in to RNDR. And honestly, I'm gonna probably stack my orders down, because down here's the bullish order block. So let's do that. We have the bullish OB, and this one, I'll probably just wait. I'll probably just keep for quite a while. But yeah, this has the horizontal support, the diagonal support, the 61.8. So a lot of different things going on for it, right around the $2.01, $2.10 area, all the way down to the $1.88. So yeah, I'll stack a bunch of orders in for this, because it just looks really good. So I think I'm going to end this here. So I did Bitcoin, Ethereum, BNB, and RNDR. And if you want me to do any other ones, then let me know. Like I mentioned in my previous videos from yesterday, I really like OP because similar to Reindeer, if that is the name, sorry, it's RNDR. This was the previous top, busted through it, and now it's back down here. It had a nice bounce and then had a really nice nice looking candle formation. So I got in. I've been playing this, and I'm holding this, and I'm holding this until this right here. This is the up move before the down move that broke the market structure. So this is the bearish order block for OP, and that's why I want to take my profits up here. But this is not too much to ask for. This 17% is really not too much to ask for because, I mean, just look at it. Just look at it. So I'd probably want to sell. I'm going to sell here, then I'll look to see if there's like a potential rebuy somewhere else, or maybe I'll keep some. But if we were in a bull market, then I would absolutely be wanting to keep it, but we're not totally there yet. So I'm still taking some profits. But yeah, this hopefully what happened to this, where, you know, we had the diagonal and we had the horizontal and we had the 78.6, and then the price fell underneath of it and then wicked all the way back up. Hopefully that's going to be the same thing that happens to RNDR, where we have the horizontal, we have the diagonal, and hopefully it wicks down here into the bullish order block and closes back up here above the horizontal and preferably above the diagonal as well, and then keeps on moving up. That would be honestly amazing. So that's what I would do, and I would probably target look left. I mean, look on the weekly time frame. I would target right here for 42%. That's the type of gains that I want to see, you know, 42%, stuff like that. So, and this is a nice 2-2R. So anyway, I'm going to end this here, and be sure to like this video and subscribe if you want more of these. And I'm going to be also doing book reviews, and I'm going to be doing a lot more stuff, a lot more videos as I continue to work on my course and my trading program and everything like that. It's like working really hard on it, but I want to get videos out to you guys, especially because we're somewhat bullish ish. We're still not there yet. Obviously, it's not going to be for a long time, but I want to put out content. So yeah, I'm going to end this here. Hopefully you guys are staying safe out there, and try to really like save as much money and as you can this year, just like last year. And I personally am investing every single month, every single week, and I have multiple accounts. So I have my trading account, I have my investing account, and I'm trading like these things in my trading account, and my investing account I'm just like buying and holding, and in my longer term account I'm just buying every single week. So I have multiple different accounts. It helps spread things out, helps make things spread a little risk, you know, spread my risk. And so I'm not all on one exchange in case the exchanges go under. You know, there's a lot of different reasons for it, but yeah, different strategies. And so I'll be making more videos like this. Hopefully, I mean, tomorrow I'll make another video, and I'll go through these coins, and then probably a few other ones as well. I'll see where these are at, and then I'll go through some other ones. All right, cool. See you later. Bye.